You want to find out how to shop around and get the best mortgage rate possible. And now you came across this video where I'm telling you you can't. Well, I want to be clear that it's not necessarily that you can't. You can't get the best mortgage interest rate by shopping around, but rather it's really quite complicated and nearly impossible. It's much more difficult than it seems at first glance. You want the best interest rate you can get when you get your mortgage, and I don't blame you. A 30-year mortgage, which is what most of us are going to be getting when we get a mortgage, is a very long time to pay a very high balance at a particular interest rate. And obviously, the lower the interest rate, the more we'll save. So you'd like to know, how do you shop around to get the best interest rate? But let me just get one thing out of the way. If you just want the lowest possible interest rate you can get on a mortgage, then you probably just need to go to Google, type in lowest mortgage interest rate, find one of those websites that offers all the different listings of mortgage interest rates available, and find the one that has the lowest interest rate, and just see where that gets you. My guess is that you won't end up with that lender getting that interest rate. And that is the point of this video. I want to give you some insight into how lenders work, how interest rates work, how lenders advertise those interest rates to hook you and get your attention. But more importantly, what you should do instead of shopping around for interest rates. Is this good information? If so, do me a quick favor and hit that like button. Helps me reach more customers looking for this information just like you. So let me first of all cover how you should shop for interest rates if you're going to do it anyway. Now, if I were shopping for a mortgage, here is how I would do it based on the experience that I have working in this industry for the last 20 years. I would call a handful of lenders, let's say somewhere between 3 and 5 lenders. And I would ask each of those lenders to provide me a very specific rate quote. I would ask for a 30-year fixed mortgage on a primary residence, on a single family home with a 20% down payment, with a 740 credit score. But I would even ask for a specific rate, let's say 3%. And then I would ask them to provide me a loan estimate, or an LE. By getting all the loan estimates with the same interest rate, then I'm just left with comparing fees. I would then simply compare the fees that the lender is charging, meaning things like the origination fee, application fees, underwriting fees, processing fees, any fees specific to the lender. Now, what I don't care about are any third-party fees, things like appraisal fees, or title-related fees, or taxes, or insurance, or government fees, or anything like that, because ultimately, no matter which lender you select, those third-party fees will generally be about the same, and ultimately the lender is not going to dictate those fees anyway, so the lender you select will have no bearing on what those fees end up as. So with LEs in hand, disregarding all third-party fees, all with the same interest rate, I can then look at just the fees and determine which lender has the lowest fees. From there, I can say specifically that that lender with the lowest fees and the same interest rate as every other lender that's been compared is going to be the lender for me if I'm looking at strictly the lowest cost lender available based on the handful of lenders that I selected. But there is a lot of other criteria to consider. In fact, the government through the FTC actually provides a mortgage comparison worksheet to help you in comparing mortgage lenders and shop around for the best lender and the best interest rate. In fact, it's 2 pages long. I mean, check this thing out. There are so many questions to ask that it would be overwhelming to go through this with each lender you're possibly considering. You're starting to get the picture on how involved properly shopping for a rate actually is. But when you're borrowing hundreds of thousands of dollars, even a slightly higher interest rate can add up. So you're willing to do it anyway. Well, you've got the overview, but there are some details you need to know about shopping, which I'll share with you next. And if you're already decided that this is just something you're not going to do, then I've got you covered too, with what you should do instead. Let's get moving. My name is Scott Wynn, and I am a licensed mortgage advisor with the Wynn and Eagan team at Citywide Home Loans. If you want to buy a home in the next 12 months, then click that subscribe button, and together we'll make it happen. The first reason, and probably the biggest reason why you can't shop for interest rates effectively at least, is because rates change too quickly. Or at least they can. The interest rate market is very similar to the stock market. It will open at a particular price, it will close at a particular price, and in between, there's some volatility. Some days are more volatile than others. You could call me at 8 o'clock in the morning, and I could quote an interest rate that would be very different than what it might be at 2 o'clock in the afternoon, or at 11 o'clock that day for that matter. And that's just because the market is always moving. And so in some cases, the interest rates may stay generally the same. But the problem is you never know when that may occur. And that's just during a single day. But now let's just say that you're comparing rates between different lenders from one day to another, or 1 week to another, or 1 month to another. Well, think about all those fluctuations that have occurred. That means that if you contacted lender A 2 days ago, and the interest rate they quoted was 3%, and now you're contacting lender B, and in the meantime, interest rates have gone down, and now that lender B is quoting 2.875%, you're thinking that lender B has a lower interest rate. But in fact, lender B may be at a higher interest rate now in comparison to lender A, because lender A's rate is now 2.75% because the rate market has dropped. Now that's what can happen in a matter of a couple of days, or even a single day. But there are lots of other considerations that play into rate fluctuations. These things include relationships with banks. They can be risk tolerance that either that lender or the bank is willing to take, maybe a targeted product that a bank wants to go after. But that may only last for a couple of days or a couple of weeks or a couple of months. But that can change without any notice to you while you're doing your rate shopping. So how do you overcome rate fluctuations when shopping for a mortgage? Well, it's really impossible, but the best way to do it is to shrink the amount of time that you're shopping for a mortgage to as little as possible. Really, I'm saying an hour to maybe 2 hours of time maximum when shopping for an interest rate. Meaning you would have to contact all the lenders that you're potentially wanting to work with and have them all answer the phone, have them all provide a rate quote, and do that all within a 2-hour block of time. Can you see why that might be pretty challenging? Now let's just say you're willing to do that. You realize that the slight benefit in a lower interest rate could literally save you thousands, if not tens of thousands of dollars over the life of your loan. So you're willing to do this. Well, the second reason why I think that you can't effectively shop interest rates is because you just don't have the time. It's already very time consuming to shop for a home, to schedule time with your real estate agent, and to go look at the homes themselves. But it's also very time consuming to get a pre-approval in place, to go through the application process of providing all of your information, running a credit report, providing all the documentation that a lender needs in order to issue a pre-approval. And if you are going to do that with multiple lenders, it's even that much more time consuming. And on top of that, you're going to shop around. First of all, you're going to have to call during normal business hours, 8 to 5, Monday through Friday. That's generally probably when you're working. Sometimes you're going to have to leave messages because not every lender is going to answer their phone when you call them. And when you do reach them, you're going to have to go through some sort of conversation with them to talk about your qualifications, what you're looking for, and answer any questions they have before they're willing to provide a rate quote for you. And some lenders won't even provide you a rate quote until you complete an application and a credit check. Which brings me to another point. The third reason why I don't think you can effectively shop for mortgage rates. And that's because you don't want your credit run multiple times. Over 20 years of helping customers buy homes and get a mortgage, the number one objection I hear more often than anything else related to getting a pre-approval in place is the fear of running a credit report and the impact that an inquiry may have on their credit score. The fear is that by running a credit report, your inquiry is going to pop up and that's going to drastically reduce your credit score. Well, I'm here to tell you, the only way to know your credit score and to get a mortgage pre-approval is to run your credit report. Now, if you're going to shop with multiple lenders, those lenders may require a credit check before they're willing to quote an interest rate, which means that multiple lenders are going to be running your credit. Now, that's not necessarily a bad thing. In fact, if you do it within a 14-day period of time, it only counts as one inquiry on your credit report. It will show multiple inquiries, but as far as the impact on the score, it will only count as one if you do it within 14 days. But no matter how many times I've told this to people, they just simply do not like having their credit report run. Now, I don't necessarily blame them. There's a lot of personal information you're sharing in order to run a credit report. Your name, birthday, social security, home address, all of those things are very private information that people don't necessarily want out with lots of different places. But without doing that, it makes shopping for a mortgage and an interest rate quite complicated because the lender doesn't have all the information necessary in order to effectively quote a mortgage loan for you. Now you might be thinking, I'll just run my credit report with one lender and then tell all the other lenders what my mortgage credit score is. And that might sound okay, but the problem is your credit report is always being updated. So even though the inquiry didn't necessarily negatively impact your credit score, the changes on your credit report, time and payment history, and things being reported may change between when that credit report was run and when your credit report is ultimately run by the lender you end up choosing. If you end up selecting a lender who hasn't run your credit report based on the credit report and score that you got from another lender, ultimately that next lender, the lender you select, is going to have to run their own report. Now, if the credit report shows a different score than what you provided to them, of course, the rate is subject to change. So really, to be effective at this, every lender that you have quote an interest rate will need to run your credit report. And I'm not sure that that's something that you're willing to have done. The fourth reason you can't shop around for mortgage rates is because some lenders simply won't do it. I mentioned it briefly earlier, but many good lenders, top lenders out there, are not willing to quote interest rates on an initial phone call. They're going to need and require more information so that they can provide an effective quote. And the reason for that is because top lenders understand how involved and complicated shopping interest rates is. The last thing they want to do is provide an interest rate and then turn around and ultimately lose your business because of all of the factors previously mentioned. Top lenders also realize their value. The value of their experience and expertise to guide you in selecting the right loan product, as well as the right interest rate with the right discount points or premium pricing. Top lenders know that if you're shopping around for just the lowest price, you will always be able to find a lender willing to provide a lower price. Somebody is always out there willing to undercut another lender. And top lenders realize this and don't want to compete in a losing battle. Instead, top lenders focus on knowledge and experience to guide you in selecting the right mortgage product at the right interest rate based on your unique situation. But that in and of itself creates its own issue. And that's the fifth reason why you can't shop around for a mortgage rate. And that's because you might be getting different advice. One lender might suggest you go with FHA, another might say conventional. One might say lender-paid mortgage insurance, and one might say monthly mortgage insurance. One might say that you should use discount points to buy down your interest rate, while another might suggest premium pricing to reduce your closing costs. All of these are different ways to go about customizing a mortgage loan for you. And unfortunately, not all mortgage lenders will agree. Well, for you, this can get quite confusing and downright frustrating if you're talking to multiple lenders at the same time. But ultimately, if you boil it all down, it goes down to that cliche of you get what you pay for. If we think about this logically for a moment, right? And you go online and you search for the lowest interest rate you can possibly find based on a set of criteria. And you come across the interest rate that is better than anyone else that you can find. Let's think about this. If that lender is willing to offer a lower rate than everyone else, the only logical conclusion that we can come to is that lender is willing to make less money on that loan than any other lender out there. They don't have access to some special loan that nobody else has access to. I'm telling you that right now. So the only conclusion is that they're making less money. Well, if that lender is making less money, then that means they will have to pay their loan officer, the one that's advising and assisting you, less money than a competing lender. That means that that loan officer is willing to accept less money per transaction. Now, who's willing to accept less money on a transaction when they can make more money elsewhere? Well, in my opinion, based on my understanding of how the industry works, it would be somebody who has less experience, who may not have the choice to work for a lender that is willing to compensate somebody at a higher level. And that's because maybe the lender is offering more services, such as lead generation services. And if they're spending money on lead generation services and offering lower interest rates, then not only are they making less per deal, but they're also having to spend money to get those deals. So let me ask you this. If we go back to you get what you pay for, would you rather work with a loan officer that is hungry, that wants your business, that puts in the effort to learn and grow and build their business to provide value and expertise to select the right loan product for you, or do you just want the lowest interest rate? Now, there's no wrong answer here. If you're very well qualified and you've got an 820 credit score, you know exactly what you want, you are putting 30% down, you don't have to worry about looking at all the different various options, and you just want the lowest interest rate, no matter what that means in terms of customer service or the ability to reach your loan officer or even reaching the same person over and over again, well, then maybe going with an online lender that provides the lowest possible interest rate would be the path for you. If, on the other hand, you're looking for a higher level of service, or you need some advice and direction along the way, or if you just see value in having a professional loan officer work through this process with you, then my thought is that going with the lowest cost lender and the best interest rate is not going to be in your best interest. So here's what you do instead. Probably the best thing you can do to select the lender that you're going to work with is to get a referral to a loan officer, a mortgage advisor, not a particular bank or a mortgage company, but a specific person. The person that assisted the person who is referring you, it could be a friend, a family member, a coworker. It could be a variety of people as long as you already have an established level of trust with them. Somebody that has similar expectations that you would have, because if they were happy, then you'll likely be happy as well. But I wouldn't stop there. See, I would go online and Google the person that you were referred to. Find out what other people, not just your friend or family member, has experienced, but what a large number of people have experienced. Let me ask you this. If you were going to make a purchase online, what's one of the first things that you do? Well, my guess is you check out reviews. You check and see what other people who have purchased and utilized the product that you're interested in and find out what their experience was like. Well, a mortgage lending experience is no different. So what has the experience of others been like with the loan officer you were referred? Is it good? Do they have online ratings? What do the people have to say? This is an important part of selecting the right loan officer for you. Now, if somebody has something particularly alarming online that you want to be concerned with, maybe go back to the original referral source and ask them about it. So if the loan officer passes the online review test, the next thing I would do is pick up the phone and call them. And when you do, make sure you start taking note of things immediately. Like, do they pick up the phone? If they don't pick up the phone, how quickly do they call you back? Or do they call you back at all? All of these things are indicators of what it will be like working with them down the road. And maybe in a situation where you have to get a hold of them quickly, such as when you're making an offer on a home. Now, when you do connect with them, what should you ask? I think it comes down to just one question. I would ask them, why should I work with you? Then simply sit back and wait for their response. My guess is that you'll get a pretty good idea of whether or not you want to work with them based on the response that they provide to you. And then go with your gut. If it feels right and it's the right loan officer for you, go with it. And if not, then get a different referral or search online for top lenders in your area. Or better yet, look at the best YouTube loan officer around and contact them and see what they can do to help you out. Now, I'm not suggesting that if someone was referred to you and has good online reviews and seem to do good on an initial phone call, that they're going to provide you the best interest rate. In most cases, they probably won't provide you the best interest rate. But again, I don't think you should be searching for the best rate you can find. Instead, it should be within the ballpark range of what a going rate is at that time. So how do you know what the going rate is? Well, there's a great website called the Freddie Mac Rate Survey. Each week, Freddie Mac surveys nationwide mortgage lenders to identify what their rates and fees are for those rates and provides a national average. Now, of course, this is 1 week delayed, so it's not going to be exactly perfect. But again, what we're looking for is something within the ballpark range of where rates are right now. If the lender that you're referred to that has good online reviews and you feel comfortable with provides a rate that's in the ballpark of what Freddie Mac is showing on their website, I'd go with it.